So in a recent video, we talked about the 9 steps to creating passive income through real estate. But today we're going to talk in a totally different vehicle, not just real estate, but truly wealth creation vehicles. Now I have a number of these steps, I call them, our commandments for our playbook for prosperity, and I'm going to share those with you today. So step 1 is to know your outcome. As with anything, okay, you need to know your outcome. Dang near every video that I do, I talk about the 3 most important questions within dang near anything we do, which is what do you want, why do you want it, and then you can go to work getting it. I bring that up and I rehash it all the time because far too many people are doing something, the how, before they really know what they want and why they want it. So number 1, my friends, we have to identify what the outcome is. Know your outcome. That is our playbook for prosperity rule number 1, commandment number 1, know your outcome. And for me personally, income is the outcome. See, I want net income for life. Net income for life. And for me to be able to achieve net income for life, that is cash flow. Okay, for me to achieve net income for life, I put together my 5 to Thrive. And I have been to all sorts of financial seminars, I've read all sorts of financial books to really develop these. So first, this 5 to Thrive that I'm going to go through, I didn't necessarily just create this. I have compiled this from learning from some of the top financial minds in the space. So rule number 1, my rule book for investing. Like for me to invest in something, it needs to hit these, once again, 5 to Thrive. Now, your rules may be different, but with any of you, you need to have rules. And I didn't have rules for the longest time. And the reason I'm gonna stress this right now, because I didn't truly have clear-cut rules as to what I would invest in, once again, what my target was, y'all, I've lost a lot of money in investments that did not truly meet my criteria. In other words, I was doing the how without identifying what I wanted and why I wanted it. Which means I was just investing in anything that came my way if I had the money to invest in that at that time in that day. So you need clear-cut rules. It's a beautiful thing. So my 5 to Thrive. Number 1 is don't lose money. Warren Buffett, he says, rule number 1, don't lose money. Rule number 2, don't forget rule number 1, or C rule number 1. And I'm talking, I have been literally learned from at the feet of some of the top financial people in the space, and the most common thread, the most common theme that they talk about is don't lose money, because you can't grow it if you don't have it. So risk, listen, I love risk. I love taking big risks. I like that kind of stuff. But when it comes to my wealth creation vehicle, I need to have a balance of risk reward. So I need to understand, does this have the opportunity to lose money? And what are the chances that I do lose my money, and am I okay with that? Rule number 2 is an asymmetrical risk reward. My goal for the year is actually to be able to say asymmetrical. Well, damn it, I just said it. I just achieved it. That's a hard word to say, okay? In other words, the potential upside far outweighs the downside, right? I want to be able to have the potential to make $5 for every $1 that I risk. Your asymmetrical risk reward may be different, but you want to have an asymmetrical risk reward where you can protect your capital, but still gain outsized returns. See, investing in something that gives me very slow 3-4% returns makes me want to puke. That's not necessarily what I enjoy. That's not in my vehicle. I want something that has less risk, but still huge upside. And you don't need to have a whole lot of risk just to have a whole lot of upside. In fact, it's the opposite of that. In my opinion, well, in my experience, not just my opinion, things that have the most risk, actually, that just means there's a bigger chance that I don't make my upside. So I want an asymmetrical, once again, risk reward of 5 to 1. Number 3 is cash flow. I invest for cash flow. That's what I want. Like I told you that my target income is net income for life. That is cash flow. You don't have net income for life without cash flow. I want to invest in assets that produce cash flow. Things like cash producing real estate. It's one of the reasons that I love real estate, apartment buildings, rental properties, things like that. Also dividend paying stocks, things like that. If somebody's going to bring me something and it's just equity, upside, no cash flow, chances of me investing in it are very slim, because once again, my number 3, my 5 to Thrive, is cash flow. Now, number 4 is diversification times 4. I want to diversify by 4. Now, this is something that takes lots of effort to identify up front, but once you identify it up front, which is what took me the longest time, once I identified it up front, now I had these buckets. okay, that I knew yes that did or no that didn't. So let me give you an example of how I diversify by 4. This is my core 4, the core 4 of diversification, okay? So number 1 is to diversify over asset classes, different asset classes. So I invested in multifamily real estate, heavily invested in multifamily real estate. But what happened is I got too invested into just one asset class, which I loved the class, I loved the asset classes, is why I went gangbusters in that, and I still do, but I want to diversify over multiple asset classes. So not just real estate, but real estate, stocks. I want to diversify over multiple asset classes, once again, not just in one. That allows me, all right, my core 4 to diversify by 4 is number 1, diversify over asset classes. So for example, if you put all your eggs in one basket, somebody's going to take all the eggs and the damn basket. So you need to diversify over different asset classes. I'm obviously heavily invested in multifamily real estate. I love that asset class, but that's one of the things, you can't get too emotional or too in love with one asset class. You need to diversify over multiple. So I'm looking at stocks, real estate as an asset class, digital currencies, bitcoins, things like that. Diversifying over asset class. Now, number 2 is to diversify within the holdings within the asset class. So real estate is an example. This is number 2. Within real estate, I don't want to just have all multifamily real estate. I can have a good chunk, but I still want to diversify over. So maybe it's a certain percentage within multifamily real estate, a certain percentage within storage units, a certain percentage within RV park, whatever it is across the different holdings within an asset class. Number 3 is to diversify globally. This is one that I just this year have started to diversify into. Literally every ounce of my investment portfolio was US based, but then I went and I learned from some of the top financial minds in the entire world, and I realized that every one of them were diversified globally. So they were not just centralized into one geographic location, they were diversified globally. Just this year, I have started to tap into and look into different investments for long-term, once again, cash flow plays to diversify globally. This could also work for you, like thinking, say you're investing in real estate, investing in just one area, like your own backyard. I'm only investing here locally. All your real estate is in one area. That's very risky, because if something happens within that one area, you are at risk. So you can diversify not just globally, but you can also diversify, instead of just having real estate in one area, diversify across the US. That's what's beautiful about the teams that we have and the investments that we have. I am invested in just shy of 10 different US markets for real estate. Number 4 is to diversify across time. And what that means is I found myself investing in big chunks, okay? I would I'd have a bunch of money that I'm like now looking to place, and I would invest in big, huge lump sums. What that does is it makes you very prone to market volatility. So I always want to invest. I want to always be investing and creating a cash producing vehicle. And what that does is it smooths out some of the market corrections, some of the market volatility, so that I can take advantage of ups and downs instead of making big, huge lump sums and being at risk with those ups and downs. So the 4 ways that we diversify, okay? Number 1, asset classes. Number 2, the holdings within those different asset classes. Number 3, globally. So think bigger than one spot, diversifying globally. And then number 4 is diversify across time. You should always be investing. A percentage of your income should always be being put to work in a cash producing, money creating vehicle. So rule number 5, once again in my 5 to thrive, is tax efficient vehicles. If I'm going to invest in something, I want it to be in a tax efficient vehicle. Essentially, how can I structure my investments, not just my investments and my withdrawals, in a tax efficient way so that I keep more of my returns? You know, a big learning lesson for me, I had big exit in a portfolio that I exited of properties. Big exit, big money, big returns. I cashed out and then went to go reinvest. And I did reinvest and that helped, but by cashing out in the manner and the way that I did without truly looking and thinking through the tax efficient ways to do it, I did not keep as much of my returns. And wealth creation 101 is to, number 1, make enough that you have enough money to invest. Number 2, pay as little as humanly possible in taxes so you can keep those returns, so you can continue to have that creating wealth for you. That is my 5 to thrive as far as my outcome goes. And I'm just telling you, when the target is clear, success is near. If you will take the time to know your outcome, then you'll understand when an opportunity comes across your way, you don't have decision fatigue. You know, yes, it does meet my criteria, or no, it does not. Okay, so identify your outcome, know your outcome. All right, that is a lot for one video, but that is literally just commandment number 1 within my prosperity Playbook. And listen, your actionables, I wanna make sure that you have some actionables. So first actionable is if you found some value from this video already, maybe you found some gaps into your prosperity playbook. Maybe you found something that you could add as something that you needed to do. Maybe you don't even know your outcome. Maybe you don't even have a playbook. If you found some value, man, share this episode with somebody else so that they can also get that value. But your actionables to help you build your own prosperity playbook, specifically commandment number 1, to know your outcome. I'm gonna give you 4 key actionables for you to go put to work. Once again, my friends, do not skip the actionables. This is actually where the gold is. If you're just sitting here digesting YouTube content without acting upon the things that you've learned upon, listen, my dad would always say, learning without execution is worthless. So actionable number 1, identify your 5 financial dreams. 5 financial dreams that you would like to achieve. Whatever that is for you. 5 financial dreams that you would like to achieve. Maybe it is donating a certain amount to a charity that you love. Maybe it is getting a house on the beach. Maybe it is retiring by a certain age. Maybe whatever it is, identify those 5 financial dreams that you have. Make some closer, some farther away, identify 5. Number 2 is once you have those 5, create a clear measurable target for all 5 of those. So for example, maybe it's not just donate to my favorite charity, it's I want it, like one of the dreams that I have is I want to, in one sitting, in a whim of inspiration, donate $1 million at one time to whatever cause I feel so called to do in a whim of inspiration in that moment. I want to be able to do that. I've donated well over 7 figures to charitable causes, but I'm talking, I want to donate 7 figures in one sitting. It's a dream that I have. So when you create these outcomes, these measurable outcomes. Number 3 is now that you know your 5 measurable, once again, the SMART goals, measurable financial outcomes. And number 3 is to write a compelling future for each one of those. And I would encourage you to include specific numbers, specific timelines, and also write out like the why behind it. Like, why is that so important? Why is that going to, when you achieve that, like, what does that look like? How is that going to impact your life? How is that going to impact others' lives? How are you going to feel? That why is so powerful. But timelines, for example, have a timeline. The one that I mentioned of being able to donate $1 million in a whim, that's on my 3-year horizon. And you want to have 3, 5, 7, 10-year goals within your financial dreams. You can go bigger than that, but if you don't have any, let's start within a 10-year time frame, and then we'll go from there. The last one, number 4, is then to just put a plan together to review those things regularly. What I found myself doing is creating these big, long-term dreams and not reconnecting to them enough. So create a plan to be able to do it. Maybe you're going to review them weekly. Maybe you review them monthly. I like to review them at least at a very minimal monthly, and then Britt and I review them collectively together every 6 months. And this is something that's had a big impact on us. So we started that probably about a year and a half ago. And it has been massive for us to just continue to connect and be like, are these dreams still our dreams? Have our dreams become bigger, better, different, or have we already achieved them? And that's damn powerful as well. My friends, your prosperity playbook for you and your family is something that you cannot sleep on, and I would encourage you to create. But the number 1 step, the number 1 commandment is to know your outcome. Hopefully, once again, you found some value from this. Go share this episode with somebody else. Leave me a comment below on what you identified as your outcome, and maybe even your 5 to Thrive that you put together, and certainly give me an understanding of what your financial dreams are. As always, live always with aloha, my friends. Peace, wealth, prosperity.